Good afternoon, everyone. It's Coram and Carson here with a look at the market for Friday, June 16th, and a look at how the week unfolded. Stocks lost a little bit of steam by the end of the week, but it was still a strong week, holding the bulk of the weekly gains. But the Nasdaq and the S&P did break a 6-day win streak today. It's hard to complain about much, Ed, when we've been expecting a pullback to get a down day.
To get a down day, and you can see that they're reluctant to go. But I want to take a look at three stocks: McKesson, Chipotle, and AMD.
All right, we'll take a look at those stocks. But first, let's look at the major indexes. The Nasdaq today down 0.7%. The S&P 500 down 0.4%, and the Dow off by 0.3%. The Russell 2000 today down some 0.7%. So along with the Nasdaq leading on the downside there. But I mean, we've just been getting so stretched from those moving averages, the longer term moving averages, and now the shorter term moving averages too. A lot of daylight between the Nasdaq and the 10-day line right now.
Yeah, even falling to the 10-day line would be a noticeable drop. And yesterday, the Nasdaq closed a little over 10% above the 50-day line, which is getting pretty extreme in that level. It came down a little bit today, but yeah, it wouldn't be surprised to see that. It is impressive. I mean, the market ran right through a hawkish Fed meeting on Wednesday, or they didn't run through it, but held up. And then on Thursday said, yeah, the Fed was a little hawkish. We're just going to keep on rallying, and powered higher. So I think there's a lot of reasons to be bullish long term, especially with some strong market breadth. But we could be up for a pullback, especially in the tech sector. And just something to be noticing for the next couple of weeks.
Absolutely. Well, let's take a look at the S&P 500 now. Not quite as stretched as the Nasdaq, but still pretty stretched here, Ed.
Yeah, 52-week high. I believe this was the best week since March for the S&P. Strong gains here, improving breadth again, showing that. So nice to see those gains. But as with the Nasdaq, may need to take a bit of a rest.
And let's look at blue chips. Here is the Dow. We talked about on Thursday how it was notable to see the Dow getting above the bulk of its sideways action. So getting to its highest levels, passing its mid-January high, still holding above that level, even with today's decline.
Yeah, I mean, you'll see this with some of the other indexes we're looking at. What a change from just a few weeks ago. I mean, it was breaking or testing the 200-day line. Now it's like, okay, is this to be a laggard? This is the kind of laggard action we want to see, in a market rally.
And it looks like next stop to clear on the upside would be the mid-December peak at about 34,700 and change. And now let's look at small caps. It looked like in early June, we were going to really start to see the small caps ramp up. And now that they did have some strong gains earlier in the month, now maybe seeing a little bit of indecisiveness.
Yeah, this one ended up with a pretty small weekly gain, as I recall. Yeah, so that ended up positive, but that's not the worst thing, because again, if you look at it, if you can imagine if this were a stock, well, it almost looks like it's getting a handle here. I mean, so having more of that action, and whether it's here or stocks near the top of bases or further up, that's sort of what we want to see. So while it would have been fine to have the Russell keep on moving a little more, there's definitely an upside to this kind of action as well.
Next on our list to check in on is RSP. This is the equal weighted S&P 500 ETF. We've talked in recent weeks how we've been seeing improving participation starting in early June, and it looks like that's continuing, Ed. So yeah, RSP up 2.5% this week.
Yeah, very nice action, just showing again that breadth that it's like, and barely fell today. This is what you like to see. Again, with the Nasdaq, if the Nasdaq, this would be somewhat ideal. The Nasdaq pulling down more than some of the others. Okay, the small caps always tend to move up or down more than anything else. So that's on any given day, that's not a big deal. But if you could see RSP and the Dow and the S&P hold up better than the Nasdaq, or the Nasdaq sort of gradually comes down, that would be ideal. We don't know how that's going to continue, but today's action was overall pretty darn healthy.
hmm And so, speaking of non-tech stocks, here's a look at XLI. I'm going to go on over to the weekly chart. So, a gain of almost 3% for the industrial sector this week, clearing this large consolidation.
Yeah, really nice. A number of them have run up straight from the bottom, so it wouldn't be bad if we could just pause here. If you'd be a lot of stocks right near their buy points, let things catch up. We saw that with a few techs, like I can think of some software names that sort of surged up and then paused around buy points. That would be nice if we could see that with some of the industrials. But again, there's a whole batch of stocks that we weren't talking about a couple of weeks ago that really should be on people's radar now.
XHB, home builders, also looking pretty strong. That 6.2, that was a nice day there. That it seemed like we really started seeing things working outside of tech. Up 2.3% this week, so now up 3 weeks up in a row. And we got earnings from Lennar this week. Seemed like there was a positive reaction to that report. But I guess would it make sense now to see a little bit of a break here?
Probably a little bit of a break here. And there's also some other parts of the housing sector, like some of the building materials or housing retailers, that
In
some of
this,
them
yeah.
are that are in this ETF that are setting up or acting well. So this is definitely another area of strength.
And chips and software, how did they fare this week? Looks like pretty good. SMH up 4.5%, clearing a 3 weeks tight, Ed.
Yeah, so chips had one down day somewhere in here, but maybe two. I'm not sure, but it's like, boy, that was a powerful move again. Yeah, 2 down days, but really just shaving just a little tiny piece of that off. This has really been an area of strength. Obviously, when you have NVIDIA there, but there's plenty of other stocks showing some strength. And yeah, this was a little bit of an opportunity, right there, probably where to get in. Probably not a great time to be getting into it now, but boy, this has really been doing great.
It sure has. An IGV worth checking back in on. Also had a nice win streak up until today, down at 0.7%, but still for the week up 5.1%. So again, hard to complain too much.
Yeah, when you can't when a stock or an ETF looks like it's going vertical, you really can't call it a pullback yet. So going vertical up, and so yeah, this looks really, really strong. And SMH, IGV, a lot of them are extended from their 50-day lines, and it's hard to find many stocks that are actionable because they're just so extended. But definitely ones you want to watch.
Yeah. So, with all that being said, at all of these charts that we've looked at, and we'll take a look at a couple more too, those individual names of interest. But does it seem like with how stretched we've gotten, whether it's days up in a row for certain stocks or sectors or the broad market, or weeks up in a row, is it just profit taking here at this time? And if so, should traders be doing that, and how much, if any?
Yeah, I mean, it really depends on your investing style, how much of your holdings. I mean, if you have 70% of your holdings in, say, one stock that's been going up a lot, well, maybe you want to take some off the table. If you're not really invested, that's a different strategy. If you like being nimble, going in and out of, like, making small buys and adding and subtracting. So it really does depend, but you do want an exit strategy. Do you sell some as it goes through the 10-day line, or as it goes through the 21-day line? Or do you sell on the way up? I mean, selling winners there's no right answer, kind of thing. But when you combine the fact with the market being sort of maybe ready for a pullback, that gives you an extra reason to say, maybe I take some off the table. I mean, it could be that you'll be a chance to say, like, if IGV came down to the 21-day line, or SMH, or these individual names, if you sold some now, maybe you'd have a chance to buy that back later, or to buy something else that you like even more. A chance to really concentrate into some of your big winners, or the ones that you really think have a chance to go.
Yeah. And something else that members of the team have pointed out before, Ed, I'm sure including you, is if you are enjoying some nice gains and you're starting to get stretched from those moving averages, at some point, we don't know exactly when, we will get a pullback to at least the 10-day, to the 21-day, or even the 10-week line eventually. But at each of those stops on the way down, you have to ask yourself, how comfortable are you seeing that level of a drawdown. And if you're uncomfortable seeing a decline of 3%, 6%, or if you can stomach it, then that is going to impact your trading style. How much do you really want to capture that profit and lock it in and not want to give it back? Or on the other side, are you trying to hold for a bigger move? And if so, you're going to have to sit through those pullbacks and those digestions.
Yeah, and I agree with all that. And then one other thing is that it's one thing to say, oh, I'll let this stock fall to the 21-day line. But what if all your stocks fall back to the 21-day line? And if you're fully invested, which you may or may not be, then you feel it.
Yeah. So well said. And now let's take a look at MCK. This is McKesson with a breakout above 400 and a long base.
Yeah, so it sort of has a handle here. It didn't really provide much of a savings on the buy point, but nice action here. The volume wasn't great, but it was better than we've seen more. The blue bars are a little higher than other things. So in the last few months, even the below average ones. So nice action here. This is not going to be, this is defensive growth. If the market's going to go through a pullback, this might do well. This had a long consolidation, but it had a pretty good run before that. So it could definitely.
Yeah. I'll go out to the weekly chart so people can see. Yeah, it was really impressive. So this stock has a history of making some big sustained moves where it can just ride that 10-week.
Yeah, so this could be something, and if you think if there is a pullback, this might hold up better than, say, something that's an AI stock. If you have an AI-led pullback, stocks that have doubled in the past 6 weeks or so, this may be resistant a little bit to it. But let's face it, if the whole market pulls back, you just have to keep that in mind. A lot of names, it may be fairly broad-based, just harder hit on the tech side.
It does feel like we've been talking about more setups in the medical sector. So just further evidence that we're seeing that broadening of leadership, or at the very least, improvement in the charts, Ed.
Yeah, and a lot of different fields. Like this is drug distributors. There's some other drug makers, some biotechs. A lot of medical products had really strong weeks this week.
All right, let's look at Chipotle. This is ticker CMG. It's been trading very tightly, right above that 2,000 level. And now it's put in enough weeks, Ed, to where it is almost touching that 10-week line. So if we get a bounce off of that level, could that be an actionable opportunity?
Yeah, technically now it has a 4 weeks tight. Maybe, you could wait for that little move up there. Another week, it would be a flat base. But yeah, it comes down to the 10-week line. That would pretty much be ideal. And then bounce from that either straight away or maybe if it got above, say, this week's highs, where you could sort of clearly get above a lot of that resistance or a down, that way, or a downtrend, and you'd be getting above those levels. So yeah, but getting a bounce off of that next week, the 10-week line is probably going to be getting even higher, probably getting up to the the 2,000 level on the 10-week. So this has been holding up so tight. It looks like a buyout.
I know.
Honest, it looks like a stock that's being acquired by somebody, but it's not. So this one has really strong growth. This is not boring growth, the numbers that they're showing here. So definitely one to be paying attention to, or especially right now if you might think that techs are going to take at least a momentary rest.
Right. And we got the strong move on earnings to clear a big consolidation a number of weeks ago. And it's a lot of volume behind that. And that's the other thing about this recent tightness is it's also happened in super quiet volume. So if we get a scenario where we get a strong bounce with some volume behind it, doesn't mean it's guaranteed to work, but I would be fairly compelling, I would say.
I think you're right.
All right. Next on our list and last is AMD. Its downside reversal this week saw shares sink some 3.9% in above average volume. And it does look like that volume this week may have been higher, the highest volume this year, and it's to the downside. So is this the beginning of some pretty notable divergence between NVIDIA and AMD this year. I mean, we know NVIDIA has been the stronger stock, and historically it seems like they sort of jockey for leadership, at least on the stock side. One will outperform for a little while, then the other one will. But it seems like there's potentially divergence happening here this week.
Yeah, it could be. And AMD released some chips this week, and the reaction wasn't great, at least ultimately. And if on a daily chart, this came out and was surging higher and then reversed lower. So this is one of the first ones that is really seems to be pulling back. It's sort of moving toward its 21-day line, of course, and getting towards the low of this mini consolidation. I mean, obviously that's, so it could get down to those areas. So is this one you would want to take advantage of? But it also depends on how the market is acting. Do you really want to be buying this when the market is just starting to pull back?
Right.
When if you think, well, is this really the one I want, or should I wait for, something like NVIDIA, which is very stubborn, doesn't want to come down yet. So I think there's names that are going to be coming down. You want to be watching them, and maybe this will turn around and start showing strength again. But look at some of these leaders that are coming back. Maybe the first ones that are pulling back are the ones you want to say, no, maybe I don't want these. Maybe I'll cash these in. I mean, you could have, and wait for what you see the more resilient names. But this is what we're going to be seeing now. And again, this is what you're going to stomach. Look, you probably felt pretty good if you were at 130 or so on Wednesday or Tuesday,
Right.
and now it's come down, like say 8%. In just a matter of days, or 10% from the high probably. And how much more that, before you say, I wouldn't want that. So there's a lot to go on, but this is definitely one to be watching. But it's not the time to be probably taking action on taking a new position for sure.
Mm-hmm. That makes sense. All right. Well, as we wrap, let's take a step back and look at the big picture. Another thing I don't know if we talked a whole lot about, but was the macro side of the equation that we got a big update on this week from the Fed, which paused rate hikes but signaled 2 more coming this year. So a hawkish tone, but the market was pretty resilient, it seemed, Ed, in the face of that news. So what do you think is ahead for next week? And also your thoughts on the reaction that we saw to the big Fed news this week.
Yeah, a couple of pieces of news was the Fed meeting in China, some stuff going on in the Fed meeting. Part of the reason I think the market reacted so well to it is because honestly, they don't believe the Fed. If you look at what's priced in, they're a little bit more likely. They nudged up the odds for a 1 rate hike. But it's not a lock, and there's really not any odds of a second. I mean, there's very little chance. I mean, the Fed may very well go ahead and raise it too, but the market isn't acting like that right now. And on the other side is that China, there was a couple of rate cuts by China's central bank, and maybe the hopes for some more fiscal stimulus. And so we saw commodities come up, and I think that buoyed markets as well. So those are positives. There's honestly not a whole lot of news. There's not that many earnings reports next week. There's not that much on the econ. There's always something that can happen, but it does seem relatively quiet on the scheduled news front. And so the markets will have a clean thing. Is if the markets want to pull back, if the markets want to hold steady, that's there's not going to be a lot of outside news necessarily to be messing with that.
That makes sense. And so the battle plan for the week ahead, as we've been saying, it's not the best time to be adding new exposure, especially in tech, because the Nasdaq is the index that looks the most stretch. So if traders are itching to make new buys, perhaps look to those other areas where we're seeing fresh setups in the non-tech areas.
That's one thing you can do. There's a lot of stocks that are setting up, or you can simply say, I'm going to hold my powder, and wait for some of these tech leaders to come back down. Those are both good options. You can do both. And, you could also be considering taking some partial profits with an eye towards, raising some cash so you're ready to go when there is a pullback. But I think it's just like being short-term cautious but long-term bullish makes a lot of sense. Just sort of not be thinking about adding too much exposure, but really spending a lot of time studying, well, what are the stocks that I really would like to target, maybe even in the short run or a few weeks from now. And that's, and setting yourself up maybe for what hopefully is the next leg of the bull run.
Yeah. And personally, when we've been in a power trend in the past in a strong market, it's been nice to have those opportunities to buy on those pullbacks and bounces, because you have a clear line in the sand, that you're wrong, or maybe your timing was off, but just a lower risk entry. If you get pullbacks along a run, I find that I have an easier time staying in if I'm not underwater. So those early entries can be helpful in that way, or those pullbacks for those add-on entries as well. So yeah, I totally agree. I think keeping a bit of powder dry right now makes a lot of sense. So we'll see what we get. I know I didn't really ask you a question there, Ed.
No,
Any
I
any
didn't have
thoughts
anything to add. I
from
thought that was
your
great. I thought that was
perspective
great.
on
Yeah,
how you're going to handle next week?
that was great. I mean, obviously it'll be a short week, but they could probably
Yeah.
the market could still have a lot of fireworks, and it's just try to keep a level head with all of this.
Yes. Wise words to end on. We'll leave it there. Thanks so much, everyone, for tuning in. Hope you have a great 3-day weekend. Monday is a stock market holiday. So, as Ed mentioned, it'll be a shorter week next week. So, we'll see you back here on Tuesday, starting with IB Live in the morning, investors.com/IB Live for the details on that. We'll see you there. Have a nice long weekend and happy Father's Day.